So there's a couple things I want to talk about next. Both of these articles are from Zero Hedge, and I just ended my last video on the same note. As a bonus, a friend of mine that I met in this neighborhood when we moved here last year, David, his daughter plays with my kids. He was just over here today. Kids are all the whole neighborhood was out front playing outside. We were chatting and stuff. And we're talking about housing, and he'd been looking at housing lately, recently. I'd asked him, "You look at any new houses?" He's like, "Yeah, we did actually today. We're gonna look again tomorrow." He's like, I just don't know if we really should right now. It's like they're at their all-time high again. And I said, "I know. I've been doing videos on this for days now." I said the only problem, if there's going to be a problem, is we know the housing market's coming down. The Fed is absolutely hell-bent now telling us they're going to start raising rates for sure as a common theme. It can only push housing down further. And we have all these other debt bubbles that have to burst too. So I think if we all wait, we could get a really good deal. I said the only issue that I can see though is if we do have let's say a large housing crash, prices come way down. That might be in a backdrop of much higher interest rates. I said, so you could look today for a $300,000 house at 4%, or you can look at a $200,000 house at 6 or 7% potentially in the near future. And I don't know exactly what the math is. I'm just giving you a slight example here, but you might say, oh well, the payment for the house is the same. I'm making the same payment on the house because again, interest rates rise. You're making the same monthly payment because a lot of your payment's going to interest. Whereas now 3-4%, excuse me. And I told him, I was like, look, let's not forget something too. Back in 2006 and 7, when we had the big melt up in mortgages, housing prices then crash. That was we didn't have 3 and 4% interest rates then. Those rates were 5 point something, 6 point something, whatever rates. Now we got the luxury of 3% for a while, and then just recently it's just barely over 4, and it hasn't gone up anymore. But they did hit it at the end of last year. It's now 4. I was like, but what if it goes to 6 or 7? So I was like, if you find the right house, I guess, and the price is okay to you, that's one thing. He's like, yeah, but he's like, some of the stuff I'm looking at, it's like, $500,000. I'm like, there's, for 5 acres in a house. He's like, it wasn't even that big. It wasn't even that nice. He's like, I said, I know. Believe me, people are smoking crack again, just like they were in 2006. But who are you not to smoke crack if you're the homeowner that wants to sell and the market is, I guess it's Bitcoin, $2 Bitcoin. Now it's $1,000. Well, you can't argue with it being 1,000. I'm not going to sell my Bitcoin for $200. If I'm going to sell it, I'm going to sell it for 1,000. The market says it's worth 1,000 right now. Until it doesn't. So I still think I'm waiting for sure, for housing. But I was telling him, I was like, look, I've been doing videos for these last several days. Data after data after data keeps coming in that is showing we've got problems that are not going away. They're getting worse. Debt problems. I mean, the defaults are happening again. You got he's like, oh, well, I just read. He's like, I was reading this morning that for housing, people losing their houses again, like foreclosures, so they're back up on the rise again. I said, well, yeah, not just that, bankruptcies, both personal and businesses. Remember, I just did that video. Massive spending, getting more in debt on credit cards, student loans. I just covered this stuff. So I'm like, I was like, David, if I do these videos like I do, and then one day I come out and say, oh, well, that's an interesting stat. I haven't seen that one. That's actually saying that we may actually have some good times. This is some good data points in here. Maybe the housing market's not going to go down right now. Right? I said, but I can't find it anywhere. I don't come across it. You can't find it, even if you try desperately to look for it. And he's like, oh yeah, no, I was talking to the realtor. He's like, the realtor was kind of telling me, well, we don't know if right now, this is just like, it's like a one-off time frame where it's nothing like it's not a trend yet, And he said, yeah. He's like, but I thought to myself, I think it might be a trend. I said, oh, trust me, it's a trend. It's not getting any better. It's not going to get any better. No matter how hard Trump tries, and believe me, I stand by him and I want him to win. This is so far bigger than Donald Trump. And it sucks because he's not a one-worlder. He's not part of the club, as you saw. He's cleaning house currently. He just got rid of the 7th floor group State Department, the quote-unquote shadow government, as quoted by the FBI regarding that group. They're just going to fire them all. That is fantastic. So Zero Hedge has one article, what's wrong with this picture? Turn on any mainstream business channel or even President Trump's tweet stream, and you will be told how awesome everything is going to be. Just look at the stocks, look at the sentiment surveys, look at consumer confidence, look at small business optimism. There is 2 small problems with all of this data. There's, with all of this. There's the hard data, and it's not confirming the soft data at all. So this chart, which I'm going to share with you, soft data, words, optimism, hope, faith, looking great. Right there. Looking great. Hard data, the stuff I've been yelling about for a very long time, but really hammering home in the last 2 weeks or so. That's this one, right here, red one. Oh, real data. Real data says, oh, not looking good. If that chart, let me put it back on, just for fun. If that chart right there was your bank account, the red one depicts your real active money leaving your bank account, which is why it's going down. Not just because it's red, just the trend is down. But the green one is you telling your wife or husband, things are going to be fine. We can cut back here and there. Honey, we've already cut back. Yeah, but maybe we can find some more to cut back. You know, I've got a really good suspicion that I'm going to get a huge, enormous, gigantic raise this year. And my, June's when my anniversary at work is, and that's when the raises come out. So, man, if I get a big one, we can turn that around. You know, I'm an optimist. It's very optimistic. Yeah, but honey, you've never got a 50% of your salary raise, and that's what we need to go the other way. Right? So, no, hard data. Hard data says, hope all you want, pray all you want, go into trance all you want, beg somebody, pray to the moon god, pray to whatever you want to do. Hard data says no. No, sir. Yeah, but I thought, no, sir. Yeah, but no, sir. Each and every time, data says no. And that is also on a backdrop of fake government data, which we know is fake, which means the real data that I'm talking about, right here, hard data, really is real, and it's probably worse than we think because we have to fight against the fake data. So, that's one thing. And according to Goldman, vampire squid Sachs, also from Zero Hedge, investors will soon realize... No, let me rephrase that. I'm going to rephrase this on behalf of Goldman Sachs. And Muppets will soon realize they were too optimistic. Goldman Sachs really wants the market lower. After several increasingly more comprehensive critiques of Trump's fiscal policies on Friday, just as the S&P closed at fresh all-time highs, propelled by a late day ramp, Goldman's chief equity strategist, who has a 2,300 year-end target on the index, cautioned that cognitive dissonance exists in the U.S. stock market, as investors must reconcile S&P 500 performance with negative EPS revisions from sell-side analysts. Specifically, he notes that the S&P 500 has returned 10% since Election Day, while consensus 2017 adjusted earnings have been lowered by 1%, and predicts that investors will soon de-rate their expectations of potential 2017 EPS growth as they face the reality that the accretive impact from tax reform will not occur anyways till 2018. In short, financial market reconciliation lies ahead. We are approaching the point of maximum optimism, or as I like to say, people smoking hopium. And S&P 500 will give back recent gains as investors embrace the reality that tax reform is likely to provide a smaller, later tailwind to corporate earnings than originally expected. Even if it didn't, and it was fantastic, in other words, not provide a smaller, later tailwind to corporate earnings, but a huge one. It was fantastic. It was great. That does not change the hard data. Who was it? Was it Bernanke? Who the hell was it that said, a country's economic strength is determined by their stock market? Nothing else. Just if they got a strong stock market, don't look at any other indicator. Wasn't that Bernanke? I think. Wasn't it Bernanke that said that? Oh, Ben. I wonder what old Ben's up to. Ben, where you been, buddy? Miss you, man. Miss you coming out. And I miss, even more than that, Ron Paul giving you hell in Congress and watching you sweat and put your hands together as if you're praying to Moloch, the owl god. Please stop him. Please make him choke. Don't want to answer that question. Sweating bullets. I miss those days. Ron Paul, I miss you, buddy. Some of the optimism has to do with Trump, with a jump, in quarter four earnings. However, much of that has to do with a slowdown in energy company write-downs. While there has certainly been an earnings rebound, the future is far less exciting than the recent rally will make it appear. Investors are optimistic about an improvement in economic growth and the prospect of increased corporate EPS. All 11 sectors contributed to the 10% rise in the S&P 500 index, with financials and information technology contributing 30% and 22% of the 208-point gain. Decomposing the strong performance shows reduced EPS growth has been more than offset by price and earnings expansion, which accounts for all the index gain. Goldman then notes that while the corporate management team commentary from quarter four earnings calls substantiates some of this optimism, forward EPS do not justify it. And indeed, analysts' EPS estimates paint a different picture. Consensus 2017 adjusted EPS has been revised. Revision. Upward? No, of course not. What do I always tell you the revisions are? Downward by 1% over the last 3 months. Sell-side analysts appear hesitant to incorporate potential tax reform and deregulation into their estimates, given elevated policy uncertainty. So, bottom line here is that even Vampire Squid Goldman Sachs knows, which of course they've always known, but usually what they say they're doing the opposite. Oh yeah, get involved in mortgages, sky's the limit, and we're going to short the mortgage industry. But every now and then you'll have an analyst or someone come out and say something that does have a cause for concern. This is one of those things, because this kind of stuff goes in line with the other data that I look at, charts, experts, etc. You can't ignore these things. Your financial livelihood depends on it. And there's only one thing that protects me. I don't know about you. Precious metals. And a splash of Bitcoin on the side, if you will. Just to be safe. And again, why would Trump want to try to turn this around now when it hasn't gone, when the stuff hasn't been dealt with? See, you have to deal with these things so when a massive implosion occurs, then you start over, right? The big bad wolf has to come to the house, blow it down, then you pick it up. Trump is essentially saying, no, we're not, the wolf's coming, but we're just going to pretend nothing's going to happen and go straight up to, solid foundation. This is going to be a, fortress. Well, wait a minute, Mr. Trump, the roof is leaking. The walls have the black Chinese mold, what do they call that? The wall board. The foundation's, it's not even stable. Like, Mr. Trump, can we just demolish this house, then rebuild it? And then when the wolf comes to blow it down, it'll be standing strong, right? Oh, and by the way, if you deal with it now, when it comes time to run for your next term, second term as president, you will be looking like the man, because this event will have happened as soon as you got into office. You can't take the blame. You're going to say, it was handed to me and I just dealt with it. No one else wanted to deal with it, so I did. And now we rebuild and we go forward. If he waits too long, he loses out on being the next president again, for a second term. My opinion, that is definitely my opinion, but it all makes sense. Unless he knows somehow, some way, we can escape that kind of thing and just continue on prosperous. But again, how are we doing this so far? More debt's being created. And I gave you the example, I guess it was yesterday, about the druggie. He has to keep shooting up more and more and more and more to get just a little more of his high back. When he originally did it, the high lasted a long time. And that's the same thing with debt. We did this TARP funds. We did trillions of dollars at the bank, $10 trillion in national debt, turned to $20 trillion. And what do we have? More bad numbers that keep getting worse. So what are they going to do? Let's print more money. Infrastructure project, $1 trillion. Let's print it. Let's go. The return on that gets more and more minimal each and every time. So soon you're pumping debt, nothing happens. Pump more debt, nothing is actually happening. It's doing nothing. It's futile. We are getting close to that time. And win, lose, or draw, good times, bad times or not, I don't care. I've been saying this stuff for so long. I'm tired of waiting, and I can't wait, honestly. And it may be bad, but I can't wait to see how this goes. It will be one of the most exciting times to be around, one way or the other. And protect yourself with precious metals just in case history decides to repeat again, since it always does. And Donald Trump can't change history for some reason. He's not Superman. So that's it. Again, more bad news. This is real data. Soft data is hope, hopium, pray, think. I'm optimist. I think good thought. Okay, you do all that while I'm staring at a train coming down the tracks that you're standing on with your back to it because you've got faith and hope and happiness that no train's coming. I'm going to step over here and watch you get crushed while trying to tell you, because I'm that kind of guy, I care about you. Get off the tracks. Train's coming. It's going to crush you. I don't hear a train. Bozo, you have headphones on very loud. Get off the track. Nope. Smashed. Okay. And there goes another sheeple. That's how that ends. And there's a whole lot of sheeple in the world these days who are going to get crushed. Don't let it be you. Make sure you have your medals as insurance, so to speak. Take care.